Let's welcome in our headliner for our annual conversation from the Milken Conference out in Beverly Hills, Brad Gerstner, the founder and CEO of Altimeter Capital. It's always great to catch up with you. This is especially timely given it comes on the heels of those mega cap earnings reports. We'll also discuss Anthropic versus OpenAI during our conversation today because you are an investor in both. So that's a really interesting position to be in. But let me get your thought, if I could, to start things off, Brad, where we are in the market, first and foremost, and whether you, like many, are as surprised at the speed in which we rebounded from those March lows and hit these new highs as we have this conversation today. Minor pullback, of course, in the moment, notwithstanding.
Yeah, well, it's great to be here, Scott. Not only on my 55th birthday, we're usually out there in the round with all these people walking around us. I think this is our 6th or 7th Milken together, so it's great to be here. What I would say is, I mean, listen, the conversation here has been terrific. We came into this year and there was a huge question overhanging the market. Would AI revenue show up to justify these legendary spending levels by the Mag 5? This year we're going to have $800 billion in total capex by the Mag 5, and the question was, would there be revenues to justify that? And what we saw over the course of the last month were two things. Number one, the market got comfortable that we were going to get past the geopolitical concerns in Iran and the Strait. And number two, they saw the revenue showing up from the hyperscalers. 28% revenue growth out of Amazon at tremendous scale, or 39% for Azure, 63% for Google, extraordinary. And of course, Anthropic is adding revenues at rates we've never seen before. By the way, and so is OpenAI. And so the question as to whether or not the revenues would show up to justify this level of spending has been answered very loudly, at least for the moment. But listen, part of the reason we're still hanging out at market multiples, or in the case of Nvidia, way below market multiples, is there's a wall of worry. Will the revenues continue? Are they durable? Are the margins going to be high enough to justify, the return on investment? Those questions have to be answered. I certainly feel strongly that they will be answered in the affirmative, but that's the reason we don't have a bubble and we're not running away with super high, multiples in excess of the market.
I just read the stat before you joined us, according to Goldman, that the mega caps now trade at a smaller premium than they had before to the S&P, like 13%, for the simple reason of what you and we here at the desk have talked about. The growth in the revenues and the earnings projections are astounding. So what does, just figuring your positioning and knowing the stocks that you own, I don't know. The last month must have been just incredible for you guys. But what does your positioning look like?
Yeah, I mean, listen, last month I've been at this now for over 20 years professionally in the public markets. It was our best month in the history of Altimeter. Wow. And we were bouncing off a bottom that was a tough month the month before, but we stayed the course. You can see what our exposures are to. We own compute, we own logic, we own memory, the substrate of AI. And I continue to believe that, those things are going to perform incredibly well. Think about memory as an industry is only trading at 5 times earning. In the case of Nvidia, trading at 13 or 14, fully taxed gap earnings. And so we think these things are undervalued. We understand the concerns that are in the market. But listen, it comes down to this. If AI does what we think it's going to do, and these companies supply the chips to AI, they're going to be much, much higher in the years ahead. I've said before, I think Nvidia will be the first $10 trillion company. As I sit here, in May of 26, I believe that to be true. Whether it comes all at once or whether it comes over the course of the next 2 to 3 years, we're patient. We're going to own this. It's one of our largest holdings.
So as we sort of look at what we learned, so to speak, from these mega cap earnings reports, right after they all came out, we characterized them on this program as Alphabet looking like the clear winner from the reports. Not in the biggest picture, and you can have a different opinion, of course, and we'll get that from you momentarily. The clear loser from earnings appeared to be Meta, still suspect, appeared to be Microsoft, and humming along Amazon, like you were just talking about, and the reason why it's one of your largest positions. Have we characterized those fairly, do you think?
I mean, listen, all of those companies are doing extraordinary things. Let me just give you a statistic. It's just 8 quarters ago that collectively they were doing $150 billion in revenue. Now they're doing $350 billion in revenue. They are growing tremendously faster than what the consensus expectations were just a few quarters ago. I think all of those companies are going to do great. Certainly, people are asking the question about Meta. You're spending all this money on CapEx. What do we get for it, right? So they're going to have to show continued acceleration. They're going to have to continue to do the things to maintain margin. You know, they've talked about how they're going to continue to get fit, to tighten the belt, to make sure that the margins pay for what the returns that we're getting. But I'll tell you this. If I know Mark Zuckerberg and team, they're going to deliver some great models and some great products, productivity for the consumer, entertainment for the consumer later this year. I think it will continue to perform well. But listen, Amazon, Microsoft, and Google have tangible returns. Their cloud revenues are accelerating at scale. We thought Amazon was best positioned, for a lot of reasons, partly because it had underperformed, partly because of Trainium. But they're really just doing an incredible job. Now major shareholders of both Anthropic and OpenAI. OpenAI about ready to distribute all of their models across AWS, which we think will help accelerate OpenAI. But clearly Google, with its TPUs, its cloud services, is benefiting tremendously from what's going on in AI. And most amazing, let me just say, I was on here 2 years ago and I said, listen, Google is suspect because 10 blue links is going to get displaced by the answers of AI. They grew search revenues 19% in the quarter, way higher than we forecast a couple years ago. I'm glad we had the mental flexibility to own Google along the way here. But the reality is this moment, because the rate of change is so high, Scott, you have to maintain your mental flexibility. But I don't think you're well served by trying to day trade this. You'll get whipsawed because the market was down a lot earlier in this year, only to come roaring back. I mean, you look at the returns in the month of March, or the month of March and the month of April. If you sat out 3 weeks in April, you missed 2 or 3 years worth of return in many of these stocks. So that's the danger of trying to think that you can out trade this thing.
To borrow the phrase from Yogi Berra, it's like deja vu all over again. A little bit, it sounds, around Meta, specifically, as you're just articulating. All the money they're spending, can they hold in margins? Can they this, that, and the other? It almost feels like you want to draft another letter, but your position size today isn't what it was when you wrote the original time to get fit. But are we in a little bit of a moment in which investors are crafting their own sort of questions about this company?
Well, I'll tell you, Susan Lee is an extraordinary CFO. She's focused on free cash flow. Mark and the team are totally AI-pilled and are focused on delivering the best products in the market. I think they're going to shock the world in the second half of this year with some of the products and the models that they're going to roll out, but they know they have to deliver. The nice thing is AI is bringing incredible efficiencies to their business and everybody else's business. I think you're going to see margin expansion. If you look at the S&P 500 earnings increase, a tremendous amount of that is coming from margin expansion. I think we're going to see that for the next 3 years. It's going to show up in the economy in the form of productivity gains. And Meta led the way in the fall of 22 and in the spring of 23. Remember, it was Mark Zuckerberg who wrote his own letter that said flatter is faster, leaner is better. He's lived up to it. He's led the way. I think he'll continue to do that with Susan, making sure that margins stay intact, notwithstanding all of this investment.
I'm hoping that you're not going to give me a I love all of my children equally kind of answer when I ask you about Anthropic versus OpenAI, in which you invest certainly in both. Because I feel like, and Joe alluded to this a moment ago, that investors have started to try and pick a winner, at least now between the two of them, and that Anthropic seems to have stolen a lot of the buzz because of their positioning within the enterprise relative to the consumer. You've had some questions now being asked about who's on the best roadmap to an IPO. Is OpenAI missing some of their revenue targets and their user targets? All of these things that we gave them, at least at the beginning, the benefit of the doubt. Now, I don't feel like it's so much. How do you answer that?
Well, listen, the Kentucky Derby was this weekend, and the horse that started, in last ended up winning the Derby. The fact of the matter is we have 3 or 4 horses in this race. They're jockeying. They're changing positions along the way. They're all great. And guess who's winning? Team America is winning. We have multiple models competing, whether it's Elon, whether it's Google, whether it's OpenAI, whether it's Anthropic. They are keeping America on the frontier. At the moment, make no mistake about it, Anthropic has taken the lead in January, February, March, and April by adding historic levels of new revenue, right? Because they came out with Claude Code and Opus 4.6 in early December, and enterprises across the world are adopting it. But if you look at the growth in Codex over the course of the last 4 weeks or 3 weeks, it's pretty incredible. If you look at what's being said on X and Twitter about Codex versus Claude Code, incredible. So here's the thing you have to know. I believe that the wave is the biggest wave in the history of technology, will be incredibly beneficial for America. I'm rooting for all of them because I'm rooting for America. I think you can own all of these. It's not that every one is equal at a moment in time, Scott, but this idea that one of these is going to win it all, I think is misplaced. On the enterprise side, just as we have with Amazon, Google, Microsoft, we have great competition. They split up the profits of the cloud business. I think you're going to see that in AI on the enterprise side. On the consumer side, sure, they haven't got to 1 billion weekly actives yet, but they already are at over 900 weekly actives. It is the verb still in AI, but you can't count out Google or Claude, and a lot of consumers are using it. So we have active competition. They're both doing great. Here's the deal. I would buy both of them today in the market if they were trading in the public market, because I believe that the entire sector is early in its penetration of the largest TAM, the total addressable market we have ever seen. We are still very early days. The two winners are going to be much, much bigger than they are today.
Brad, great to see you. Happy birthday. And I agree completely with your assessment of OpenAI.
It's Joe Terranova, by the way, 'cause I can't see. Go ahead, Joe.
Oh, Brad knows me well enough to know my voice. Brad, I have to ask you, there is some general concern about ultimately when OpenAI and Anthropic step into the public market, where does the capital come from? Is that a concern from your perspective? Walk us through how you see that unfolding.
Well, first, Joe, you've heard me say many times, they've already IPO'd. They were just private IPOs. OpenAI raised $110 or $120 billion in the most recent round. Look at the cap table of the investors in that round. It looks, first, it's bigger than any IPO we've had at $120 billion. And then, the list of investors in that round, from the Fidelities and the Capital Groups to the Altimeters and the Cotus, it looks like a day one IPO cap table. So I think you got to understand that. Secondly, whether or not they'll be bought in the IPO in the public markets all depends on how the company is doing relative to its price. You and I both know there are trillions and trillions and trillions of dollars on a global basis that look to find any opportunity for arbitrage, any opportunity for alpha. So long as they're priced fair to the future expectations of the company, of course, there's going to be tremendous demand for the business. The same for Anthropic. Frankly, the demand for Anthropic shares today is some of the highest demand I've ever seen over the last 25 years in Silicon Valley. So, I hope, and you've heard me say, I want these companies to come public. I think it's super important that retail investors in the United States have the opportunity to participate in the two most important companies to come along in technology in years. I'm thrilled SpaceX and X.AI are going public at the end of June, right? Most people, are talking a lot about Anthropic and OpenAI. Elon is an N of one. He's building incredible capability, and capacity on the data center side. And so that one's going to be the first one out of the gates. I love the fact that they're all coming public, and I would love to see each of them put some shares away for every kid in their Invest America, their Trump accounts, right? Could you imagine if every single one of these 40 or 50 million kids had a share of SpaceX or a share of OpenAI or a share of Anthropic in their accounts? That's the way you align all these kids with the upside of capitalism and the upside of AI.
But I don't know if what I just heard from you is exactly a ringing endorsement for the retail community to go out and buy these IPOs in the open market when they eventually do come public. If you suggest that they've already, in a sense, IPO'd, like what level of growth is going to be available to the retail community? What level of upside that's already been realized by the pros, not the average Joes?
Well, listen, buying a company at $1 trillion in value or $1.5 trillion in value is not a get-rich-quick scheme. So I just want to be honest with folks watching at home, for retail investors, right? You're hoping to compound these stocks at 20, 30% for a long period of time. That's how you make a lot of money, right? Long-term compounding. If your hope is that you're going to trade the IPO and double or triple or quadruple your money on a $1 trillion valuation, it's just unlikely, right? You're right. Today, companies are staying private longer. More of the value capture is occurring in the private markets. We have to address that, right, as a country, and make this more accessible to retail investors early in that value creation cycle. I don't make the rules of the market. I'm just reporting what I observe. I think they'll have plenty of retail and institutional demand, so long as the price of the IPO leaves enough meat on the bone that investors can underwrite to 2 or 3 years of compounding in that 20 to 30% range.
No, I just think it's important, and I think it's critically important for them to hear, for that cohort to hear from somebody like you with a bit of what I suppose you could call a reality check on what may be. Speaking of memory, do you think those stocks have gone too parabolic, too crazy? What we've been seeing in certain parts of the chip area?
So first, if you look at the multiples, the fully taxed GAAP earnings of those businesses, the multiples are actually flat to down, Scott. They're trading at 5x fully taxed earnings. Samsung's going to do more in profits this year than Google. And so the question has always been, why the hell do these companies trade at 5 times earnings? Because people think it's a boom and a bust. There's no durability to the earnings. If you believe it's different this time, if you believe there's durability to those earnings through 2028, through 2029, which we do, and could be much further out, then these are ridiculous values in the public market. We maintain them as some of our largest holdings. We think they will continue to compound. And we think, I'm going to do a pod on this in a couple weeks with the CEO of Micron. I think there's some industry restructuring going on that will be good for the long-term health of the business. More collaboration between them and the hyperscalers that perhaps will give people more confidence about the long-term durability so that it's not so much of a boom and bust anymore.
Well, when you look at some of the other chip names, I mean, the gains in the last month are extraordinary. Doesn't even begin to tell the story of an AMD, for example, which is up 57%, or a Broadcom, which is up 31, and so on and so on and so forth. What level of pause, if any, does that give you about where these stocks have gone?
I mean, listen, you got to make choices. Some of these stocks, understandably, have been memed because people have gotten really excited about the CPU super cycle or the GPU super cycle. We just had this conversation. Obviously, token consumption is exploding. I think that will continue. But look at Nvidia at $195. Nvidia is trading lower than it was 6 months ago. So it's hard to say at 13 or 14 times fully taxed earnings on a business that's giving you guidance of $1 trillion of future orders. It's hard to say that that's in bubble territory. I look forward to hearing from them in a couple weeks when they report. But I think Nvidia is terribly underowned. I think it's terribly undervalued today, and so we're happy to sit in that and to own it. But I agree with you. If you look at ARM, which is another one of our big holdings, clearly Lisa's doing a great job. Look at what Lip-Bu is doing at Intel because of the shortage in CPUs. And so I think you have to, listen, when anything goes up 100% in a month, Scott, for retail investors, they shouldn't feel bad about taking a little profitability. Right? This game is either like hold it forever and let it compound, or pull a little profitability off when you think the market is getting ahead of itself. I'm just telling you, when you look at Altimeter's net exposures month over month, when the market pulled back on fears about Iran, we didn't run away from the market because we saw fundamentals accelerating. We pushed more onto the table. We've continued to make sure that we have our dollars in the things that we think are best valued, but our aggregate exposure is very long the market. We believe the market goes higher from here. Hopefully we get the situation in Iran solved sooner rather than later. $120 oil will take its toll on the market if we don't solve that over the course of the next 3 to 4 months.
Jim Lebenthal's got something for you on Nvidia.
Hey, Brad, good to talk to you always. Agree with you on Nvidia. Agree with you, by the way, that we all have to be long-term investors. If you could just dig a little deeper on maybe what the most recent 6 months malaise, I'm going to call it that, in the stock price has been. Do you think it's competition that has cropped up maybe from the hyperscalers like Alphabet, like Amazon, or maybe even competition for capital? I know you've got Cerebras, and they're going to go public here, really quite soon. You mentioned Intel, so maybe this is just short-term competition, either for capital or for the actual chip demand. I'd love to hear your thoughts on that. Either way, both of these should pass, right?
Joe, it's the exact right question, and 100%. The reason it is traded off is because people believe, I think incorrectly, that all the share is moving to Trainium or to TPUs or to Cerebras. I'll be in New York next week for the Cerebras IPO, where I was on the board and a major shareholder. But here's the thing to keep your eye on. Token per watt per dollar. Nvidia is one of the most efficient in the world. Where do you think that ChatGPT 5.5 was trained? On new Blackwell chips. We got Vera Rubin rolling out later this year. Notwithstanding all of the noise in the market, the pie is growing so much that it's a much bigger slice of the pie for Nvidia, even if they're giving up a few share points to Trainium or to TPUs, which are also good products. But on a token per watt basis, Nvidia is still the best in the business. When they roll out the Vera Rubin LPX clusters later this year, remember LPX came from the Grok acquisition that they announced at the end of last year. That's going to be another huge step forward for these models. So I think Nvidia is in an incredible position. Like I said, I think you'll hear from them on earnings, but that is definitely what the market is worried about. But I think if you just look at the numbers, $1 trillion over the course of the next, 6 to 8 quarters, I think speaks for itself.
You'll be on a panel in less than 20 out there with Senator Cruz and Kevin Hassett. The topic being investing in economic mobility. So I think we all know the kinds of things that you're going to be talking about. Something, Brad, frankly, that you've been talking about on this program for the last 5 years. Let's go down memory lane for a minute. Watch this.
Everybody in this country should be able to participate in the future of America. I would love to see the Biden administration take the equivalent of a SoFi account or a Robinhood account, and rather than focusing on Social Security at the end of people's lives, how about we give a $2,000 stipend at birth, right, that people can't withdraw, that compounds on the future of America in an account that they can see their savings grow, they can see a snowball grow, right? To me, there's an opportunity. New Zealand, Australia already do it. I would love to see a national savings account in this country where everybody gets to participate in the value creation.
Well, who knew that some 5 years later, we would be talking about this coming to reality. July 4th, it all launches. And the take-up thus far has been pretty good, I suppose. I don't know what sort of expectations you had, but 5 million children thereabout have signed up for these accounts, according to the Treasury Secretary on April 15th. So what were your expectations, and where do we go from here? How big do you really think this can be?
Well, first, Scott, let me start off with a thank you, because I first talked about it on air with you. We've talked about it at least 10 times over the course of the last 5 years. It's an unbelievable dream that became law last July 4th. Starting on July 4th, just 60 days from today, every child forevermore born in America will start off with an investment account at birth, automatic, stapled to their Social Security, with $1,000 in the S&P 500. If you start with $1,000 and you save just $50 a month, it's $50,000 at age 18 for your kid, it's $200,000 at age 30, and it's $1 million at age 55. 60 to 70% of the people in this country, they just don't participate in compounding. Now we're going to change all that. It's an evolution of our social contract that will be bigger and even more important than Social Security. We're going to shift trillions of dollars in wealth from the compounding of the market to every family in America. I think it's a necessary transformation in the age of AI. Kudos to the president signing it into law last July 4th. We'll launch it, like you said, this July 4th. every child's going to have on their phone. They're going to own a little bit of Nvidia, a little bit of Microsoft, of Caterpillar, of Walmart, etc. They're in the game. They can add 10 to 20 bucks a month. As you know, incredible philanthropists. My partner, Michael Dell, and Susan have donated $6.25 billion. You know, this is what the phone app, all the families are going to receive on July 4th. So a super important initiative. You mentioned the Treasury Secretary said a couple weeks ago we're at 5 million. I think we're already at 6 million. We'll be over 10 million by July 4th. There are 40 million kids in this country eligible today to go sign up at trumpaccounts.gov. They get at least $250. And if they're under the age of 2, they get $1,000 to seed that account. We have thousands of employers, right? We've talked about them here, large to small, from Uber to Nvidia. From Salesforce to AMD, who've all said they'll add money to the accounts of their kids. This is going to be a 401k-like benefit by all corporations in America, adding to those accounts. So again, we expect that this is, I mean, if we get to 10 million accounts by July 4th, it's the single largest transformation of the social contract since Social Security and the Industrial Revolution. We're just getting started. And if I can get some of my friends to donate shares of SpaceX or OpenAI or Anthropic to these accounts, it will quickly move us to 40 or 50 million accounts. And importantly, starting in 2027, you don't have to sign up. It's going to be automatic at birth. 3.7 million kids born a year, 3.7 million kids are going to start life off as a shareholder in the upside of America. It's a great transformation, great moment for the country.
All right, you go tell that story on stage, moderated by Mr. Milken himself. I don't want to keep him waiting. So I'll let you go. I appreciate the time. Congratulations, and we'll talk to you again soon. It's Brad Gerstner, as always, from Milken with us. We'll see you.